Hassan, good morning. So,
Morning.
overall, you were up in automotive and industrial, that area for you, 42% year over year. It's now 65% of your revenue. This reminds me of Qualcomm. We were talking to Cristiano Amon last week, who's also focused in growth in automotive and industrial areas. What's happening sort of at the customer level, what they're doing with technology that gives you confidence that this most likely continues?
Sure. So look, at a high level, auto and industrial are driving a lot of the mega trends that are driving the demand from our customers. So if I break it down, it comes with, for automotive, it's the ADAS or autonomous driving. And from our side, the power for electrification. That is driving net content increases at much favorable ASPs because of the value those products create. That is what's driving a revenue increase year on year. And we see that electrification and autonomous penetration in automotive vehicles to be more as a percent of total cars made. So that growth is a multi-year growth. Think about the next decade.
Okay, so you're saying that despite the macroeconomic environment, geopolitical tensions, you're confident in the underlying drivers of these trends. But how much do you expect the weakening consumer, perhaps, that seems to be what's happening, and the implications then for your customers to affect the business? Are you giving an extra eye to costs going forward or something else? Or do you think that you're largely immune from the macroeconomic environment because of what you mentioned?
Look, from a cost perspective, we never let our eye off the ball from what happens to costs. That's where we're driving a lot of our efficiencies through our manufacturing. And that's what you see reflected a lot in our gross margin expansion that we've had last year and even this quarter. But fundamentally, what gives me comfort in the growth trajectory that we've had so far and having moving forward is really the content that those new vehicles are going to have versus the same vehicle last year. You know, EV for us has 30x more content than an internal combustion engine vehicle, whether it's EV or ADAS. That fundamentally is driving the growth no matter what the SAR or the total number of vehicles happen. We remain confident, so do our customers, that the number of EVs, net number of units made that are electric vehicles are going to be higher next year than they were this year and higher this year than they were last year. That's the fundamental growth.
Okay, so Hassan, from other CEOs who have this level of growth and this level of confidence in the underlying trends in their industries, I'm starting to hear more and more, yeah, we're open to M&A because not everybody in this space is going to be as well positioned as we are. And there's some good product out there that maybe has had inflated prices in the past, and the prices are coming down. Are you seeing that? Are you, do you have a shopping list?
Look, M&A is a continuous process for us here. The beauty for where we stand today is our standalone plan, what we've done so far and what's yet to be done as far as value creation allows us to be very disciplined about the M&A targets that we go after. We're always looking, you know, these are non-deterministic. Our focus is always on having a solid footing because M&A will just be incremental to that. But the most important point I want to make is our ability to be very disciplined, because it is not about, you know, worries about pricing or worries about costs and so on. It is more on a strategic level is when we will go after a target for M&A, because I don't see the volatility in pricing because we've been pricing on the value of our products, and value of the product does not change depending on what the macro does. It's tied to the product itself.